Hello everyone, the most awaited video is here. Today, finally, I'm recording this video for you guys. And after watching this 20-30 minutes of video, this tutorial, it is going to change your life. Believe me, we are going to segregate this particular video into three parts. Part 1, Part 2, and Part 3. All the three parts are equally important, and I want you to be hyper focused. This is going to change your life in trading. For serious traders, if you follow this particular logic and the logics that I'm going to discuss with you today on this channel, I'm confident you are going to like it. And secondly, and the most important, every day, starting today, we are coming live at 9 o'clock every day, 9 p.m. And we are going to discuss all the charts related to this particular logic. So let's start. First, three steps or phases in which you can learn trading. Step 1, get rid of indicators. Sooner the better. Why I'm telling you this? Let's say out of 1,000 people who are watching this particular video, maybe 900 or 950 people are using indicators. That's completely fine. But at some point of time, if you want to become a trader, a professional trader, you have to get rid of the indicators. Sooner the better. I'm not asking you to remove all the indicators immediately, but after a certain amount of time, after we go on live for a few days or weeks, you are going to be confident to remove all the indicators. And that's my promise. Step 2, avoid trading on chart patterns. So, what are the chart patterns that we have been hearing currently? W, M patterns. I'm not aware of few other patterns like head and shoulders, XYZ. These patterns are made from some logics. Yes, that's correct. But you have to understand the logic behind this first. This is very important. If you do not understand logics, you are not or you will not be able to identify trades. And trading is all about conviction. Believe me, guys, trading is all about conviction. If you don't have any conviction on any of the trades, you cannot make money. Maybe you can make some percentage of your capital, but trading is not about a small percentage of your capital. If you want a very small percentage of capital to be part of your profit, then you can choose to opt for mutual funds and other ways to invest. But specifically, you have come in for trading is to get multifold returns, and without conviction, you are not going to get that. So, I want you to avoid trading on chart patterns from today. Step 3, learn the logics behind these patterns. After avoiding the chart patterns, indicators, support resistance, trend lines, and whatnot, you have to ultimately learn the logics. And what is logic? From your high schools, your schools, you have been only learning logics. Behind every subject or behind every learning, there is a logic, and you need to understand that. It's your right to understand the logic behind whatever the instructor says. If I tell you that W pattern works, there has to be a logic which needs to be explained to you. Anyways, in this particular tutorial, we are not going to learn any of the patterns. We are just going to define or understand logics. So this concludes step 1 or phase 1. In the phase 1, the 3 steps that you have learned, how to avoid or how you can learn trading. Step 1, I repeat, get rid of the indicators. What is step 2? Avoid trading on chart patterns. And step 3, learn the logics behind these patterns. Now coming to phase 2. If you want to become a successful trader, start doing this. The step 1 is similar. Remove all your indicators from your chart. Because with indicators, ultimately, if you are going to choose trading as a profession, you're not going anywhere learning indicators. Okay? Second, go and watch my videos on change your life trading. And if you're watching this particular video now, the video I'm going to record, that is the phase 3. The name of this particular video is hashtag change your life trading. Step 3, read charts for 1000 hours at least. So what is 1000 hours of chart reading? Let's say in a month we have 30 days. Every day, if you try to read the charts, the bare charts, the naked charts, without any indicators, without any support resistance, trend lines, this makes 60 hours a month. If you include the live trading, maybe you trade live for maybe 2 hours, it makes 120 hours a month, which takes around 8 to 9 months to complete 1000 hours. There are few students of mine who completed 1000 hours of learning within 3 months, which means they went on reading charts for 4 hours a day. Okay, so if you read the charts on the logic that I'm going to teach you today for 1000 hours at least, coming to step number 4, you can thank me later. So if you complete phase 1 and phase 2, you're ready for step 3, inclusive. After watching these videos, after getting educated, it's your right to ask them why. The problem with our people, we never ask why. The problem with our people, we always want to worship instructors or people. Whatever they tell, we kind of believe. Everyone in the community are trying hard to explain you all things. That's very great. But it's your responsibility as well to ask the right questions. And we, as part of the community, the trading community, as instructors, will be very happy. And I'm sure about the other instructors, they will also be very happy to answer your questions. So from now, from today onwards, always focus on why rather than what. Okay. Now we have completed step 1, step 2. Now let's come to phase 3. And what is phase 3? In the phase 3, we're going to learn the concepts, the real concepts. And this is going to be interesting. First, step 1, choose the time frame. So what is a time frame? Everybody knows. 1 minute time frame, 5 minutes, 15 minutes, 1 hour, 1 day. These are the most common time frames that people use. From today, I want all of you to focus on only one time frame. You can choose any of the time frames. But the question is, or the problem is, which time frame you are going to use. Let's say if you are a scalper, which means you like trading for maybe 4 to 5 minutes. Maybe you enter around at 9:20, let's say, and you exit at around 9:23, 9:24, and your average duration of the trades are around 2 to 3 minutes. Then you are going to choose 1 minute time frame, and this is specifically for the advanced traders, and this is not recommended for intermediates and the beginners. Second, 5 and 15 minutes. If you want to do intraday trading, which means you're buying and selling the stocks on the same day, you can choose either 5 minutes or 15 minutes. Anything is fine. For swing or positional traders who wants to trade or loves to trade for a week or months, they can choose either 1 hour time frame or 1 day time frame. That is completely up to them. So I hope step 1 is clear, choosing the time frame. Second, choose a stock. Either it can be any index like Nifty, be it Bank Nifty, maybe it can be any commodity like natural gas, crude oil, or any stock like Reliance. So from now on, you are going to choose any one of the stocks or indices or commodities from this list. No hurry, you can take your time, maybe days, weeks, or months, to choose any of the stocks, but you have to choose only one. Okay? If you do not want to track the stocks, or if you do not like the liquidity and the profit percentage of the stocks, maybe you can choose or go for Nifty and Bank Nifty. If you like to trade on commodities, which is a very good option nowadays, you can either go for zinc, copper, crude oil, gold, silver, mini. Now coming to step 3, understanding build-ups. So what is a build-up? Build-ups are nothing but structures like this, structures like this, structures like this. These are called build-ups. We're going to discuss this on the charts, but for now, I'd like to mention that the build-ups are structures like this. At least three small candles followed by a large candle. That is what we call a build up. That's it. Large candle should be green in color, and these three candles, color is not important. Color is not important. So this is how a build up looks like. Like let's say like this, and let's say we have a large green candle. So this is what we call a build up. Now let's move on to the charts and look at build ups on 15 minutes time frame, let's say. So this is how we are going to identify build ups. This is a perfect build up. At least three small candles followed by a large candle. This is called a build up. Over here, This is also called a build up. At least three small candles followed by a large candle. Okay. Again, if you look at this structure over here, three small candles in a straight line followed by a large green candle. So this is called a build up. So I hope the concept of build up is clear. So we are done with choosing the time frame. We're done with choosing a particular stock, and also we're done understanding build-ups. Now, step 4, very important, understanding pending orders. So this is my favorite topic. This is the topic on which I have mastered last 4 years of my trading experience. I have been only studying and doing my research on pending orders. So you've heard, right? No one can predict markets, and that is true. There is no prediction of markets. No one, even the brokers, even the market makers, no one knows where the market is going to be. No one. Predicting a market, predicting a particular stock is impossible, at least for us. This is impossible. Only way that you can track or you can say something about a stock is by following the footprints. But footprints of whom? Footprints of the bigger institutions, the big fish, the big players. Because when the market moves, it moves mainly due to the big players. Yes, it moves also because of the retailers, but by understanding by or looking at the charts, you'll get to know whether the movement of the market is done by institutions or retailers. So if I can track, let's say, whenever they are taking their positions, if someone can tell me that hey, they are taking the positions over here, and this is the time and this is the date, but this is impossible to get it, but there is a way we can find the footprints by tracking or by knowing the charts and how. And this concept is called pending orders. Now, what is a pending order? Let's say I ask you, let's say I ask you to bring 5,000 packets of Lays or chips for me. So, what you are going to do? You are going to go to a shop or retailer or wholesaler and ask for as many as packets of chips. Maybe over there you could find only 1,000. Now you moved on to the next one. Next shop, you could only find 50. Then you went to the next shop, you could find 20. Then again you went to the next shop where you found 500. And like this, from one shop to the other, you hopped on. And finally, you could collect 5,000 packets of chips. And it took time for you, right? Because to collect 5,000 chips, packets of chips from shop, it's not a easy task to do. So how would your graph look like when you're collecting those packets of chips? It would look like this, right? You're collecting, you're collecting the packets of chips. And finally, you're going to deliver all the 5,000 packets, right? Now let's say I ask you, because I need to deliver it to someone else, maybe 5,000 children, and there is a function going on, and I ask you to give me as many chips of packets of chips as you can. Let's say if you can collect 1500 for the first 2 hours, I ask you to provide it to me so that I can distribute among the childrens. And then you can again go back and do your job for the next 3000. And again, you can give me the next 3000 packets so that the function do not get delayed. So now how the chart look like or the graph look like? You have collected how many? Let's say 3000. You've collected 3000 and you have delivered. Now how many orders are pending, or how many packets of chips? Packets of chips are the orders finally. So how many are pending? The pending are 2000. For that, again, you need to come back. You need to come back, and finally, after coming over here, you have to collect the 2000. So this concept is called pending orders. Same in stocks. Whenever the bigger institutions buy a particular stock, they buy in huge quantity. Let's say 1 lakh or 10 lakh quantity. Let's say. Okay. Now the market cannot accommodate all the 10 lakh orders at once. What they will do, they will tell, hey, let me fulfill 7 lakhs orders at first, and after a few days or few minutes or time, I'm going to fulfill the rest 3000 orders at the same level, same price. As a first step, we are going to look for a build up. So if you can see over here, this is a perfect build up that you can see. This is today is Monday, 13th of March, 7:12 p.m. and we have HDFC Bank 15 minutes time frame on, and this is a perfect long build up that you can see. And if you want to correlate pending orders with this guy collected 5000 packets of chips, delivered a few, and finally delivered the others. In this case, what happened? In this case, the ratio was maybe the guy delivered only 4000 packets or 4500 packets in the first lot. In the second lot, he delivered 500 packets. The green candle that you can see, this was a pending order, nothing else, which means most of the orders, because we don't know how many orders are going to get placed in the first time. So here you can see 500, the rest of the quantity is a very small quantity, got fulfilled, got placed, and finally what happened? The price came down, which means no one was interested to buy at this particular price, because of which the price came down. And whenever a candle closes below this pending order candle, we are going to take a trade. That's it. This is the logic. I have explained you the logic over here, and now it's your task to validate those and take care of all the orders, all the trades. Okay. Now let's look at more trades. So over here you can see these are the pending orders, and after these pending orders there was a long build up. Over here you can see there was a long build up, right? There was a long build up, and only a few of a minute orders got fulfilled, and finally the price came down, and exactly over here you're going to take your trade. So this is how you are going to plan your trade. Now it might look very simple for you because I have explained it to you, the pending orders concept, in a way that you should have no doubt, right? Now let's say this one. This was a build up, but the price didn't come down. Doesn't matter for us, no problem. Maybe this particular guy delivered all the 5,000 orders, the chips, packet of chips, and that's why it went on going up. No problem for us. If you do not get any opportunity, if you do not get any pending orders, then we're not going to plan for any trades. Pending orders is the only way we can track institutions. Okay, now let's say for this was a perfect build up, right? Over here you can see there were a few pending orders that were fulfilled, and the price didn't go up, which means no one was interested to buy, and that's where you are going to short, you're going to sell. Okay, now let's look at this was a perfect build up over here, right? And all the orders got fulfilled, and finally the price went up. So over here you did not get any trade, right? If you look at this over here, you can see these are the pending orders which got fulfilled, and over here you would have taken one trade, but your stop loss got hit, and you're going to exit out around this point. Okay, whenever there is a now, why did our stop loss got hit? Because there was some interest from the buyers to buy. We don't know who was interested. It is none of our business. But this is how we're going to track the market. You're going to take small stop losses, and when you're going to make profits, you're going to make huge profits. Okay, let's move on to a different chart and let's look. Okay, let's see for this. Over here, you can see this was a build up, and what happened from that particular area, there was there was there were pending orders which got fulfilled, and this time there were more pending orders left, and that's why the price went up, and we didn't get any trade. This doesn't matter. Okay, now let's look at this build up. Pending orders got fulfilled, and the price came down. This is where you are going to take your trade and look at the fall. Okay, so every day 9:15 or around 9 o'clock we are going to come live. We are going to take up different time frames. We're going to take up different stocks, equities, commodities, indices. We're going to take up everything, and daily we are going to discuss only this particular logic, so that you get expertise on this particular logic, and you are going to short every opportunity that you get. Okay, thank you so much.